Right, everyone. So, welcome to the YouTube live stream. And moving from this week forward, we will have a new weekend stream called as Trade Log Sunday. So, we'll actually discuss the trades which are valid in the previous week and the ones we took, what other trades I missed, what lessons you can learn from the past week's price action. All right, so I just request you all to give me a minute. I just need to change a few settings here. Right, and I also need to see if the stream does look good. All right, just give me a second. All right, I believe that should be good. And yeah, and I think we can begin. All right, so let's get to the trades we did take in the previous week, and I'll actually discuss all of them. All right, so let's first begin with NASDAQ on Monday. All right, so on Monday we had a 0.4% loss. And there is a mistake over here. We did take about 2 trades at this time. All right. So there were 2 long positions that we took. And thanks to Mr. Trump, we did lose one of them, but we kind of did manage it extremely well. But the second trade was a loss. All right. So due to bad trade management. So let us look at how that trade was. So let me just move this to the side. And this is Monday. All right. So this is Monday, the 13th of July. All right. So with 13th of July, what did price do and what did we expect? All right. So whenever you begin trading or whenever I do, what I personally like to do is to see what the previous session did. All right. So the previous session was a nice tight consolidation. All right. It was not really a good consolidation, right? I wouldn't really say it's one of the best because I like to see upward and downward movement at the same time. All right. So basically, this set of price action here is what I would consider to be prime consolidation. And in this case, we did have some sort of upward consolidation, right? So it kind of have a trend, a channel, and then price consolidates, but that is great. All right. So that is what we had, and that's what I'll accept. That's what I'll take. So New York session and 9:30 right here. All right. So this is when we begin trading. Usually this is my New York AM session kill zone. I do trade after the equities open. I don't like to trade before equities open. So in this case, what did we observe, right? What will you observe as well? So let me just close it right about there, right? Just open the replay button. So what is the first thing you see here? All right. So the first thing you see at 9:30 would definitely be on the 1 hour time frame, probably this 1 hour value gap. So you would actually wait for the equities open to be released and then for price to close as well. All right. So what do you see at that time? You would see London's low, right? That is a clearest draw on liquidity for us right there. So we have a clear London's low and we also have this low right below it. All right. So that is liquidity as well. So we'll mark out both of them, right? Now, if it's going to be highs, what do you mark out on highs? We just have Asia's high, right? Do we have any other gaps here? Not really a clean one. I would probably say this fair value gap could be marked out as well. All right. Otherwise, other than this fair value gap, you can visually see that there is nothing else which is entertaining, right? Price would not likely push there, right? And other than that, we also have these 2 equal highs, right? So it's very easy. You just probably mark out all of these nice equal highs, equal lows, and just wait. All right. So now when you're waiting, what do? You just wait for price to play out. And this is where my first position was. All right. So I saw price move against my bias. So in this case, you know that when price wants to move higher, it is first going to move in the opposite direction, which is going to be lower. So in this case, we push lower to take out clear liquidity below London's low, which is based on time, of course, and this liquidity pool right here. All right. So once these 2 liquidity pools have been met, right? So we've taken both of them out. Is price going to move lower, or what is retail going to do at that time? They're going to see that we crashed at equities open and they will most likely be bearish. All right. And what do we use to clearly see what price is going to do, we're going to see that price is below the true day or midnight opening price. All right. So we know that when price is below the midnight opening price, you're supposed to look for buys or you're supposed to be bullish. When price is above the true day opening price, such as here, you're supposed to be bearish. All right. So we have about two confluences there. You can say that we have taken out sell side liquidity and retail thinks we are bearish and we are below true day open. So which means we are bullish for the session, right? Now, can we just take a trade right here? We definitely can. That would be a true that would be a total soup entry, but we don't really do that. So we wait for price to move higher. All right. So what is it that we're looking forward to? We're looking for a change in state of delivery. We're looking for an inversion. We're looking for a fair value gap, whichever suits you well. All right. So in my case, I do like to look for the inversions and especially the change in state of delivery. All right. They work really well. And that is really my go-to. And in this case, let's just wait for price to move higher. So right here, okay, so this just gives us a clear sense of direction that price wants to move higher. And at the next candle opening price, which is going to be right here at 10 a.m., that is where the entry was. All right. Now, I do understand it might look a bit scary because we have moved all the way lower here. All right. So, but that's all right. That is really how most of my entries are. And this is what I really signaled, or not really signaled, but actually showed in the group as well, because I like to think of it as an educational service where I provide real-time alerts on what price does rather than give you signals. All right. I don't really do that. Now, at this point, that's where the entry was and price did move quite well. All right. You can see it's showing conviction that price wants to move higher. And that is really when at this time we tightened our stops, we tightened our risk because we want to make sure that we don't really lose if we are wrong. Okay. Now, the final objective is going to be these highs. All right. And we also have these three low resistance liquidity right there. All right. You can see one is lower than the other, 1, 2, and 3. So the algorithm will most ideally look to take out these highs. All right. So that is what we want to see. So in this case, we can also mark out your 9:30 a.m. high and this high as well. All right. So this is a really good move. Okay, this is really how you catch sustained moves rather than your scalps on the 1 minute. All right. So trying to catch quick scalps on the 1 minute time frame can never really work out in the, I would say, in the long term, because you would really lose focus on what price is actually doing. Right. So price tells you a story and you really will not be able to capture that if you're always on the 1 minute. All right. You might see good executions. You might see price move really well from your entry points. You might be able to capture a lot of points. That is great. All right. But that is what futures is for. That's what NASDAQ does all the time. Right. And especially during New York session, you will get those aggressive moves. But to capture clear sustained moves, you need to understand where we are in price. You need to build clear story just as I'm doing it now. All right. So in this case, we have clear equal highs here. So that is a good drawn liquidity as well. And that is what we did target. And I believe, yeah, right there, that was a Trump wick, which just stopped out the first position. All right. So that was the first position right here, which was stopped out. And I believe that was close to a minus 0.2% risk. All right. So that is what we lost out on for the session. So I was really ready to wrap things up, but we did have clear liquidity still on the upside. So what did price do here? All right. You can see we have taken out these lows and we've taken out these lows once again. And here we have taken out these lows once again. All right. So in my brain, how this works is we have really taken out liquidity once, twice, and thrice. All right. So you might actually know this as the 3-drive pattern. All right. So that is what you might call this. So in this case, if I do see once again willingness for price to move higher, I will take another long. Right. So that is what is going in my brain at that time. So price did actually do that right there. You can see that it beautifully did move higher. And this is the conviction for me that, all right, now price is definitely going to move to these highs and these highs because we have taken out liquidity 3 times. All right. Once, twice, and thrice. We've taken that out and we have clear manipulation. All right. So your classic accumulation, manipulation, and distribution, right? So what do you see here? You have accumulation, which is this entire range. And you have manipulation, which is below the range. All right. So your distribution should occur here and probably not going to get to Asia's high because Asia's expanded. So we're probably going to push higher to, let's say, these highs, which I did mark out. All right. So with that, I did enter my second position at that time with once again a half risk position. So that would count out to be about 0.5%. And I expected price to get there. All right. So if price did get to my liquidity targets, then I would be positive on the day. All right, so that's really how I plan this out. And on this retracement or the next one, right? So this was really good. And we did have a harsh retracement, I believe. Yeah, right there. And yeah, this one, all right? So as soon as this candle printed right here at 1040, that is really when I was out of the position and I did not hold, all right? So even when you trade, you know you have clear rules. You're actually seeing this live. You know that price should get there. Sometimes you do tend to move out a bit quickly, all right? So the mistake on my side would be for an exit too early, all right? So that is what the mistake on my side was. But in hindsight, as you can all see it now, this was actually a perfect entry, all right? So it was a perfect long to these highs. So price does get there, you can see, and we did reach the objective, all right? So this was a really good set of price action in my opinion, but the execution on my part was not great, and that is what pushed for the negative on Monday, all right? So that was NASDAQ, that was a minus 0.4%, and that is what pushed me negative for the day, all right? So that is completely fine. It's on a Monday. Mondays are usually low probability, and that is really how, and I usually take losses on Mondays as well, so I try to skip Mondays, and that is the loss for the day, all right? Now, there's nothing to worry about because we did have the rest of the week coming up as well, so we just wait for price to do its thing. So in this case, I'll just delete all of this and let me know if you have any questions at any time in the chat, and I'll definitely wrap this up and then answer your questions, all right? So as of now, let me just close all of this, get to Tuesday, all right? So the second trade was Tuesday, right? You can see Tuesday we had a win. So let me just show which trade that was. So once price closes here, we just wait for the next kill zone. So until then, we don't really look for anything else, all right? So yeah, so this was Tuesday, all right? And this was extremely nice. And I'm sure any of you watching this would definitely take this trade. This was extremely easy and there was no way you could have missed this one. So first is going to be the same procedure, just as I told you for Monday, all right? So what do you see here? You see in terms of accumulation, manipulation, and distribution, but first you're going to watch out for liquidity, right? Liquidity is always going to be first, no matter who says anything, no matter what concept you come up with, always find the liquidity first, all right? It's really going to help you. So in this case, once again, London's low, all right? But here you can see we have engineered liquidity, right? We have here, we have low here, 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 and especially here as well, all right? So we have clear engineered liquidity. So we expect price to get to these lows, all right? So that is the first thing. So you have your clear bias or your bias for the day, right? So in this case, we are expecting bearishness and we want to see price move lower. Now, the second thing is going to be, we're going to wait for 9:30 or equities open, right? So we're not going to do anything else until price opens at 9:30. So this is 9:15. So let me just forward a candle, and that is your, okay, 9:20, 9:25, and 9:30. All right. So that is the candle you're looking forward to. All right. Now, what do you see? You see that we have accumulated in Asia, right? Not a clean accumulation, but we do have accumulation. A very nice tight accumulation in London, right? Just as I explained on Monday, what we wanted to see, that's exactly what we have here. And price pushes higher, right? Against the direction that you want price to go to. So in your mind, or in my mind, in this way, it would be that this is going to be manipulation, right? So you would just expect price to move lower. And 9:30 in this case confirms that distribution to these lows, all right? So we wait for another candle. So in this case, right there, what do you have? You have a changed state of delivery right here. Okay, this is what you call a CISD. And you also have an inversion right there. Okay, so at this time was when the entry was placed. I believe I did wait for another candle. So at that time I did place the entry right about there. And there are a few more things here on the lower time frames which I will not get into, and that is for the university students, which I did explain this in real time, and the position as well. All right. So for you, all you need to know is a clear accumulation, manipulation, and a distribution at 9:30. All right. So we have CISD, which is confirming that. So your entry would be at the inversion or at the CISD as well. All right. So it did take a couple of more candles, right? And the invalidation is definitely going to be above this high. All right. So that is where your stop would be, is what I'm trying to say. So in this case, you would expect lower prices, and price did get through and follow through that. All right. Now, here's a tip for you. All right. I know you all are here and spending your weekend listening to me go over the trades, and definitely this is going to help you. The tip for you is whenever you see these low resistance liquidity or you see engineered liquidity at times, right? Don't try to wait for price to take out this low. All right. Because what usually happens is price, if it wants to get this low, all right, which is the final objective, it is going to smash it aggressively. All right. So you're not going to see any reaction from here. Okay. So if it needs to get here, it's just going to smash it aggressively in large ranges. So what do you do at that time? How do you take advantage of this? You actually get out of your position at the first low. All right. At the first liquidity pool. So in this case, it would be right here. And that is exactly where my exit was. All right. So you all have seen this probably on Twitter, or I have sent a mail recently, earlier yesterday, I believe, earlier in the morning yesterday, where I did send a mail where I did outline all the positions as well. So if you want to, you can just go to the link in the description and you can actually find all the mails that I've sent regarding all my insights as well. All right. So getting back to this. So that is where my exit was. All right. So a beautiful entry from CISD, clear invalidation, and in this case, 10 a.m. expanded price lower. All right. So that is what you need to note here. New York session, clear accumulation, manipulation, and distribution. All right. There's nothing else just goes on. And this was a clear win for about 1.2%. And that is how we ended the day. All right. So it was really clean. There was really no questions about what price is doing at that time. And that was great. All right. Now, let me actually discuss price action on Wednesday, and then I'll actually go over the ETH trade. All right. I didn't really get time to go over the ETH trade on the email, so I'll actually do that here. So let's move to Wednesday now. So Wednesday would be right about there. Okay. So something did happen on Wednesday in the higher time frames. So let me actually go through that quickly. So on the daily time frame, all right. So this is what happened on Wednesday. All right. So we did have a classic Wednesday high of the week weekly profile. All right. Now, when you're actually mapping out these weekly profiles, you don't really need to know what it's doing. All right. If I'm being honest, because most of my day trades, whenever I take a trade, I'm not really focused on, let's say, the daily, the weekly, or the monthly time frame. All right. Now, I do focus on this for my investment purposes or where I want to see price go towards and where the liquidity pools are, sometimes on the daily time frame, but rarely on the weekly or the monthly. All right. So in this case, what did happen is you can see your Wednesday was manipulation. All right. So price took out Tuesday's high right about there. And it also took out Monday's high right about there. All right. So we took out two highs right there and formed an SMT divergence with ES. All right. Which is its correlated pair right here. That is an SMT divergence, which is formed right about there. And we have clear manipulation above those highs, right? You can see that. And this was on Thursday as well, right? So that is another SMT with NASDAQ, right? So we do have about two SMTs there. And Wednesday was when price took liquidity. So like I said, liquidity is more important than SMT. It's more important than anything, all right? You need to know where liquidity resides, and that is where you can expect these reactions from price, all right? So in this case, we did take out Monday's high and Tuesday's high, and that is where we had a clear SMT, which confirms after price pushes lower that this is going to be the high of the week. All right. And Thursday pushed lower, and so did Friday. All right. Now let us actually go towards the lower time frames and see price action on Wednesday. All right, which is right about here. So can you catch a New York continuation profile trade? You most definitely can. All right. That was actually the trade for Wednesday, which I did not take, especially since I did take a win on Ethereum. All right. So first is going to be the New York distribution, right? Or New York continuation is what you like to call it. Now, what do you see here, right? Let me just, all right, this was the wrong thing right about here. Okay. Before your equity is open, that is what you'd want to see. Let me just delete all of this. Don't need any of them. All right. So before 9:30 opens, what do you see? Clearly simple. You see London's high, right? And you also see Asia's low. And London's low has already been taken out, so that's not what you're concerned with. So in this case, price takes out this high right there. So you know that this is going to be high resistance and you have low resistance below, right? Now, price opens at 9:30 and we push lower once again. Where is price heading towards? These lows, right? So liquidity is below, so price should most likely get there. So in this case, we open once again and we just smash through Asia's low, right? Like I said, whenever we have equal lows, it is best to take off your position at the first liquidity pool. If not, we're most likely going to crash and move lower, right? So in this case, what does price do? We take out Asia's low and it's most probably going to look towards these lows, which has not been taken out, right? So that is where the next drawn liquidity is going to be. So in this case, price returns into a fair value gap before moving lower, right? Once again, you see at 10 a.m., what does price do? We get an entry, right? So in this case, we have a nice fair value gap right there. So that's a bearish fair value gap. You can just enter off of that fair value gap. Your invalidation would once again be these highs, right? A swing high, really simple. And price plays out aggressively to the objective, right? So this was a New York continuation daily profile. And personally, I don't like trading New York continuation profiles. So this was actually a good one. I would definitely journal this. I did it myself and you definitely should as well. And it did play out pretty well. All right. Now I didn't take this trade at all. Complete transparency here. The win was on Ethereum for the day and I was not interested in NASDAQ for the day. All right. Now, usually when I start to take a lot of wins earlier in the week, I tend to be a bit more defensive. All right. I don't like to push my luck, especially since price has given me what I wanted to see. And I don't like to push a bit more into it. All right. And you all will see why on the trade on Thursday. All right. So let's get to Thursday now. So in this case, right here on Thursday, which was right there. Okay. Now, Thursday was quite interesting. So this is going to be a bit more confusing than the other trades, right? So other trades were pretty easy and you all would probably catch that any time of the day. But Thursday is going to be a bit more difficult, all right? So let me show you why. The first is going to be this candle, right? This is really what we traded on Thursday. This is your daily candle. Now, when you're trading based off of your daily liquidity pools, you also always want to be aware of what price is doing on your 4 hour and the 1 hour as well. All right. So I have multiple monitors. So I'm monitoring all of them, but you will only see this one screen that I'm showing you right now. Okay. So in this case, what I did see was, like I did mention, we had SMT, Wednesday was the high. So Thursday had to move lower, right? So the liquidity was going to be to the downside. So if you move to the 4 hour time frame, and you can see this is your Monday's low, right? Right here. You can see we opened here on Monday and we moved lower. This is your opening price. So this is a key liquidity pool, right? So let me just label that in red, so we don't miss this out. And going to the 1 hour time frame right here, this is low. All right. So the algorithm will actually look for this low right here for liquidity. All right. So that is where price should actually get to. So in this case, we are waiting for price to move lower to this exact low. All right. So let's go to the 5-minute time frame now, and this will all make sense. All right. So let me show you how the win was. So this is Thursday and right about there. Okay. Now, this is the set of price action you see, and you just reload it once again from here. All right. So we have moved lower, right? Since the true day open, we have moved lower and we have manipulated above Asia's high, right? We have a clear manipulation right there, Asia's high. Price moves lower, we have a fair value gap, price taps into it, all right, just as it always does. And for those of you who wonder if the 2022 model doesn't work, if ICT is not going to work, whatever he teaches or whatever he's been teaching all this while, it definitely does. You're just looking at it the wrong way, all right? Or you're probably looking at too many things, if I may say, right? Because that was what I struggled with when I first began, is looking at a lot of things to see if it does work. All right. So let's say you want to trade the 2022 model, which is just going to be price takes our liquidity. We have a fair value gap. You enter on the fair value gap, you target the nearest liquidity pool. It does work. You just have to train your eyes to watch that. All right. So that is what your journaling is going to do. That is what your trade journal is going to do as well. All right. So you do write things down. You take screenshots of your trades. That works. And you make sure that you have a complete file of what you're going to do, right? So in this case, price did manipulate right here at Asia's high. And so we do have sort of a London manipulation profile, right? And we are expecting price to get to this low, right? So in this case, the drawn liquidity is lower, all right? So that is what we have established before the session opens. So price moves here, right? We do have a nice manipulation above within the session, right? We actually get to, let's say, this high and tap into this fair value gap, right? We kind of fill this fair value gap at this point. So we are going to expect bearishness, right? Quite simple. We have equal lows right here, and we're expecting price to smash through these lows and target this low, right? Because that is where the liquidity resides. So price gets here and returns back into it right here. Okay, this happens within one candle. You can see the wick was right there. That is exactly where the ideal entry was. I actually entered somewhere here at this wick because you just saw that price did manipulate quite aggressively, and the next candle was going to be distribution. All right, so I'm just treating each candle as accumulation, manipulation, and distribution. So in this case, that is where my entry was, and on this expansion through, when price smashed lower, my trade was at break even at that point, or actually slightly in profits, way below this low, and price just taps right into the liquidity pool, and that is where I was out. And that is how I did end my week at this 0.5%. All right. So like I said on Wednesday, right? I don't like to take your New York continuation trades because that's not really I'm comfortable with. So that is why the risk was half risk for this trade. And that is why I just made 0.5%. All right. Or else the trade would yield me ideally more than 1%. And it would be about 4.1% up for the week. All right. So if you do have any questions here, do let me know in the chat and I will definitely get to them. All right. Now, before we end the stream, I would definitely like to go through your Ethereum trades. All right. What the Ethereum trade was. And let me just actually try to explain that as well. So right here, and this was actually the trade on Ethereum. All right. Anyone with any simple understanding of price will really be able to get this. All right. This is really, really simple. I just waited for price to open here on the monthly opening price. We moved higher, right? Now we're way below your monthly opening price from June, and we have a nice fair value gap, right? We have expanded here, all right? So we did call all of this move in the previous Sunday sessions. So in this case, we did consolidate for quite a while. And what did price do on 3rd of July, right? We closed above these 3 down close candles, right? So that is going to be your change in state of delivery, okay? Now, if you extend that, you can see we do have a fair value gap right here, and price taps right into that fair value gap. All right. So this is exactly where my entry was, right about there. And I just targeted the fair value gap, right? Quite simple. And there is nothing complicated here. This really works on all pairs, right? That's really what I'm showing you here. And I kind of actually split things up. So for my day trades, I definitely focus on NASDAQ. I don't really recommend anything else to anyone, right? I've been doing this for more than 6 years at this point, but in the sake of swing trading, I do love Ethereum. I do love Bitcoin for that. They give real nice moves. The structure is really good. Daily structure is just the best on Bitcoin. All right. It's just unmatched. You can just compare this daily structure, let's say, to NASDAQ. You can see that it is completely horrendous, right? Right there. See this NASDAQ daily structure just doesn't work, right? You can see it closes above this fair value gap, but still pushes lower. It's just what it is, right? So there are certain pairs which are good for certain things, and you just need to be quite experienced to go through all of them, right? Go through the bad phases, through the bad times, and you will clearly understand what works for you, all right? So what personally works for me is going to be the day trades on NASDAQ and the swing trades on Bitcoin and Ethereum. So in this case, we did tap here. We got there. I wasn't really worried that price is going to get here because we did manipulate all the way lower and we did have clear equal highs there. All right. So we have engineered liquidity. So I kind of knew that price was going to move higher. And in one day on Tuesday, we pushed higher. And Wednesday was when I actually expected price to push once more before moving lower. And that is where the exit was. And that is what you see, a 0.18% return right there. Okay. So we just turn on the middle line. You can see we did react perfectly off of there and we now are rejecting. All right. So that is going to be the live stream for today. So let me just answer a few questions before I end the stream. All right. Hi, Harich says Sandy. Hi to you too, Sandy. Hopefully you're having a good weekend. All right. I believe that's Colin. All right. Nice to see you here, Colin. Tuesday and Wednesday, we had high impact news accounts were blown in those period. There was confusion on X. Yeah, there definitely was. You definitely always need to wait for your high impact news events to play out. All right, that is really the best way to go about things, because it's not really, I do know that certain firms do have news restrictions as well, which is good. And that's actually one of the rules which I do agree with, because we need to know if price is going to manipulate or distribute, right? So this is really how you can take advantage of this. The news events always are going to either manipulate or distribute. All right. So they're rarely going to accumulate. Okay. They're always going to either manipulate or distribute depending on what price did in the previous phase. All right. That is what's important. Let's say if the previous phase was manipulation, news event will distribute. Right. Now, that's just how it is. Now, if the previous phase was distribution, right, prior to news event, price does distribute, then the news event will accumulate, right? And it's quite rare that rarely ever happens, all right? So in this case, yeah, there was quite confusion on X, and everyone did want to take, there was kind of like opposing bias there. It kind of always is there on X. There's not really clear direction. And I rarely do see any real traders give you a clear bias before it. So I'm not really sure who's there, which I'm kind of missing. All right. Kindly also analysis on GR40. Don't forget, please. All right. GR40, I don't really trade that, Colin. So I will not actually be doing that. I'll actually stick to NASDAQ, and the most I'll go for Euro. The most I'll go into Forex is going to be Euro. All right. So there's nothing else other than that I would like to look forward to. So that will actually be the end of the stream, guys. Do let me know if... all right, there's just one more question. Roy, nice to see you here, Roy. Your outlook on NASDAQ, sorry, I missed the intro. All right, so the higher time frame outlook for NASDAQ, all right? Quite simple, guys. It's just going to be bullish now. We've taken out sell side liquidity, so I'm just expecting the next week to follow through higher, all right? So to give you a clear level, I would say watch out for this for value gap, all right? That is what I will look forward to. I'll wait for price to open on Monday, and hopefully it consolidates, right? So hopefully it consolidates like that. So on Tuesday, we probably push higher and we can be bullish at that time. So let's say Monday doesn't consolidate and it just moves higher, right? So then on Tuesday, we can be bearish and target lower prices. Let's say on Monday, we consolidate. Tuesday moves lower, takes out the slow. Then what we're going to do is we're going to be bullish on Wednesday and Thursday until this objective is met. All right, so that is how I actually frame my bias. Okay, it's not really just going to be a particular level that I expect price to get to. Sometimes it is, because we have clear liquidity. So in this case, let's say, I'll give you a great example. Let's say we flip this inversion, right? And we close above these three down close candles. What does that mean? That means that we're going to get to this high, right? Quite simple. We have low resistance there. We have really manipulated here. We have accumulation, manipulation, and we expect distribution, right? Quite simple. So that is a unique scenario where we can do that, and we kind of have such scenarios play out. But if you're looking for day trades and you're looking for how to frame direction on, let's say, NASDAQ on the daily time frame, it really depends on what Monday does. First point is that. The second point is going to be which side of price does it purge first, right? Let's say it takes highs first, then you're going to be bearish like that. Let's say if price takes lows first, then you're going to be bullish, right? On the following day and on the current day as well. Okay, so that is it for the questions, guys. Thank you all for joining this stream, and I will speak to you all on next Sunday. All right, so do take care and have a great day ahead, and hopefully you all have a great trading week. All right, bye bye.